Cool. All right, we'll just give Bill a second here. Good morning, guys. Good morning. Make sure I have all of this run up and running here. Hang on. Fix this banner. That. Hide that. Great. Okay. Yep. There you go. You're good. Yep. Way better. Thanks for hooking us up with that. We definitely want to hear what you have to say.
Sometimes when I go out and then go back in,
yeah. So interesting.
Cleared up. So does that sound better?
100%. Yeah. So interestingly enough, I was having a similar issue with my webcam. Like it was just acting all squirrely and stuff. Not really sure. I just did the old reboot and I rebooted. I unplugged the camera and replugged it in, and it worked. How are you, Bo? Good morning, guys. All right. Why don't we just jump right into the charts? It's March 24th, Tuesday, and I'm going to just rehash what I went over yesterday with while Tom was on, the higher time frame stuff. You can see here on our weekly chart of the ES. Oh, we lost. Did we lose Bo? We sure did. We sure did. Just give Bo a second to get back here. There he is. Check. All right, guys. So there's something here that I want to point out really quickly. Let's get the higher time frame stuff out of the way.
I can't hear you, Manny.
Is my yeah, not sure.
Can you guys hear me?
Can we get a mic check, guys, in the room? If you guys can hear us, just give us an all clear so that we know. I don't. Okay, both good. Thanks, JB. Appreciate it. Bo, okay, hang on a second. Let me help Bo out.
Thanks, JB. I'm not sure why I'm not hearing Manny. I'm trying different things here, but that's all right.
All right, really quickly, bell's about to ring. Guys, what I'm thinking of doing here is so for next week, I'm gonna start jumping on at 9 a.m. because I realized that I've been in this same routine for gosh, I don't know how long, right? And I'm usually finishing up my prep and all my morning routine typically like right about 9:15, and then I typically get a cup of coffee and then I just sit around and watch the Open. But what I'm realizing is that that's probably not adding much value to you guys, me jumping on after the Open. So there's the bell. So next week is I will start
opening bell thing. Good girl.
So what I'm going to start doing next week is I'm going to start jumping on at 9 a.m. so that this way I can go over the plan early enough so that you guys can actually act on it and so on. So Look out for that. That's going to be coming starting next week. That's just a little programming note. Starting next week, we're going to start. I'll start going on at. Gonna. It may even be as early as a quarter to nine. I think that can probably fit in better with my own personal schedule. But all right, just jump right into the charts, guys. So here we go. I just want to start with the weekly chart and walk you through the progression that we went through yesterday. Okay. Let's see. Let's bring up this chart. So we can see here that on the higher time frame, the weekly chart, we kind of mapped out these moves here. Just to review quickly, this was our COVID low here, right? COVID low. We had a rally that we had the first leg up, and then we went up to 48.08, pulled back about 1,200 points, 35.02, chopped around for about 3 months, and then the market held the 50% retracement, which I think is the thing with the data point of note. We held the 50% on multiple tests over the course of a few months, and that just kind of developed value for the springboard to go higher. All right, so now that move extended and hit its target, and then once we hit that target right here, the 100% extension highlighted here, you can see that the market pulled back and then made a retraced half of this move to the 50%, 48.22, and the market found immediate support. Remember that this was our rate hike decision time. This was last April, where the markets were kind of on this move up. The market was pricing in a rate cut, and then this was when it was pretty much in doubt, or at least that was what the headline was. All right, so now we're in our next leg up. We held the half back up, and now we held the half back, and now we're in our what could be quoted as our third wave up, although this could be technically the third wave up. So on a more granular level here, there's something that I wanted to point out is that on the weekly chart, the 20 moving average tends to act as support, right? So we can see it acting as support. So it breached it, but then it came back, acted as support there, acted as support here. But take a look at this. When we lose that 20, right, we tend to lose it and then come back and back test it. And then if we extend lower, it's usually going to hit the 50. Okay. So that's exactly what we have here, right? So we breached it. It acted as support multiple times, 1, 2, 3 times. And then it finally gave up the goose and we lost it. So what did the market do? The price came back. We lost it, price back tested it, and then we sold right to the 50 moving average. So in the past, you can see here that the 50 moving average has acted as support. However, I think it's just it could be just a momentary bounce, because here it acted as support, but not truthfully or not to 100%. Here it acted as somewhat of a support, led into a 2-week kind of bounce, and then it gave it up again. So is that what we're seeing here? I can't be sure, but that's just what the charts are telling us. All right, let's zoom in to the daily. All right, so yesterday we had the big bounce, but one thing I observed yesterday, and I highlighted it when I was on with Tom, is that for the last week and a half, almost 2 weeks or 10 trading sessions, the kind of the context has been, look at these wicks, right? Early strength that's followed by late day weakness, right? Early strength, late day weakness. You can see that's indicative. You can see it in the tails on the daily, the selling tails. Right, it's not like when we're bullish and we're closing that near highs, right? What we're seeing here is a lot of selling tails, and we did the same thing yesterday. Be interested in knowing if we closed below halfway back yesterday. But so what are we looking for? So what am I looking for here on the daily, on going into the morning session? Going into the RTH session, I should say. All right. Bo, can you hear me?
I can hear you. Thank you.
Okay, great, 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 great. I wasn't sure if I was flying solo. All right,
Um,
guys. So go ahead. I'm sorry. Feel
no,
free to jump on in there.
yeah, I don't know what was going on with that there. It just suddenly resolved itself.
Okay. All right, guys. So here, so yesterday we highlighted again. In order for us to start getting bullish or start, to flip from a dip from a sell rips approach to a buy dips approach, I think we need to see a trend change on the hourly. This is a 2 hour chart, and yeah, I've been highlighting that yesterday. I kind of mentioned that in order to see that we have some signs of a trend change, we had to take out 68.80, 68.60 to 68.80, and we breached that, but we didn't do it convincingly, right? We closed right at that level, and then pre-market we spiked up to the level, and we left a big selling tail, and then during the RTH session, price just kind of, buyers failed to follow through, right? If, in a bullish environment, we would have really seen price extend higher, and we didn't see that. So headed into today, I think we have to continue to maintain a sell the rips type of mentality, because this is coming into this morning. This looked like a bull flag, and now it's just giving it up here, right? That's not a bull flag anymore. Where we would be expecting something to develop, like, where you get the flagpole here, and then you kind of get something like this, maybe even where you're going lower or higher, get a megaphone type look. We're not, I mean, we're not getting it. Um, so also on this spike up, I kind of have it highlighted here on this chart between 65.62 and 65.71. That was during the Truth Social bomb, and you can see that. I mean, there was at certain prices there was zero volume. You can go back and look at it on a volume chart, but I looked at two different platforms, and I got two different readings, but the volume was so thin there, guys, that eventually I expect this to be re-auctioned or revisited. On the first touch, I'm expecting it to act as support. So currently our overnight high comes in at 66.5350, and our overnight low is 65.80. So what I'm open to here is, we're opening up at 65.93. We're gapping down 40 points, and we're clearly below the settlement at 66.34, right? So we're opening up below value. We're opening up below value and below the settlement on a true gap down. Okay. So what I'm looking for here is, does price drive up, and can we get into value and establish some time and acceptance for a move higher that runs into yesterday's high? And I'd be looking to fade anything that comes in here. So say we have this look where price comes up here, kind of our overnight inventory. I think we can say that it's probably neutral at this point to net short. We had some vol. Let me just put the time on here so I can see what the overnight session looked like. Okay. So let's just look at that, right? So our overnight high came in at 66.53, and the settlement was 66.34. So no, our overnight inventory is short, right? I think that's fair to say. So with overnight inventory short, and have the bulls been able to drive price higher to correct some of that, the most bearish outcome is that inventory doesn't get reset, and price just tests the overnight low, and we come down into the overnight low, right? Test these single prints, get that bounce, And then this might be an area that this is a pretty, this would be the most bearish outcome, right? If price breaches the overnight low, it can't, these supports give us a bounce, but then it can't get back above the overnight low at 65.80. And then we have to expect to move down here to kind of come and test this area. Or do we do the look below and fail of the overnight low, find support into those single prints, into that lightly auctioned area, and then do we look below, trap sellers, and then make a move higher to go fill the gap, test yesterday's low, test value area low, and test the settlement. See, so this might be another area where I'd probably be more inclined to take my shot here than here, because of the overnight inventory. So if we get that move where we look below and then price comes right back up, I would think that that's an inventory correction, and we're probably going to fail into yesterday's low, value area low, and the settlement, which is precise playbook that happened on Friday, on the big sell-off day. I don't know if you guys remember on Friday, on the day we were selling off right here, we kept testing the prior day's low right here, and price just kept failing. Look at this. This is a 2-hour chart, but this was 4 hours where bulls were trying to get it into value, get it into the prior day's range, and it just could not go. And then ultimately we sold off. So that's that. So yeah, so that's what I'm looking at here. Possible look below and fail of the overnight low, reset, and a move higher that goes to test yesterday's low, fill the gap, and test value area low in the settlement. Or and then just make a decision from there. Or do we get below the overnight low and give up the goose where this support fails? It doesn't hold at all. We got a somewhat of a light bounce up here, and then get short for the move to kind of come in here and test this distribution down here. I know that this distribution has some volume on it. I can see that in another chart. So do we get that move? We're going to find out soon enough. All right. So again, look below and fail of the overnight low, or a move back up to the overnight low to test it, and then a move lower. Or do we go look below the overnight low, fail, and then go back up and test value area low test yesterday's low at 66.16, test value area low at 66.27, and then ultimately the settlement at 66.34. From a flows perspective, I saw that flows are now where on last Friday they were really bearish. So more puts being bought than calls. I think that's largely flipped right now, but I'll let Bo get in here, and that's what I got for you guys. Let's hear what Bo has. I'm going to bring up a chart in the meantime.
Thanks, Manny. Excellent stuff.
Let's see.
Yeah, I'm just sort of in careful mode here with the volatility we have. Yesterday was the biggest range we've put in the last 200 days, 264 points in the ES. That's not true with the NQ. The NQ has had some wider range days. It just leads to a sort of a discussion of how efficient markets really are, on one hand, the algos and the high frequency and all the computer price thing. The thing about that is the past 3 weeks or so, 4 weeks, we've now had several of these same kinds of upward moves off of that Sunday night low that are in that 200, 250 point range on the ES. So that was a very interesting thing to see, I thought, just in the sense that if you haven't been around and traded in bear markets before, that's something that, you just always have to remember. Bear market rallies can be the most violent thing you've ever seen, and that's what we saw. So just the overall emphasis of making sure that, and I'm guilty of it sometimes, not putting your stop in. All it takes is one tweet or whatever, and the thing can go a lot farther against you than you ever could imagine. And that's typically where you really get into trouble emotionally, because now you start looking at fading, doubling up on your loser, tripling up, and that's basically how people blow out accounts. So it's okay to use wider stops when you have an expanded volatility. You sort of have to, like on my sheets, I'm basically constantly adjusting my stops for the volatility each day. And in my mind, the trickiest thing is to move from markets that are, when the move is starting to occur from low volatility to high volatility or vice versa, it's how do you adjust your stops and your targets accordingly? Because, now here we are on the ES, you have a 5-day ATR of 155.5 points. Okay. So does that mean you really want to have a stop that's, some of you guys use a lot wider stops than I do. So what does that mean? Do you use a 50-point stop? So, but on the other hand, someone like me who tries to use much smaller stops, you just get immediately taken out by the noise and by the algos, where they're kind of reading and gaming people that are using strategy orders. As soon as your limit order gets filled, your stop gets filled. Like that can happen in a nanosecond. So anyway, I guess the point of it is just to still have that you honor those. And when something's going your way, don't be afraid to take some profit and then have a break even stop and just hope you get lucky on a big runner. Like those are the kinds of markets we're in right now. You'll have plenty each and every day to get in and get out of trades. So it's just, try to pick your best spots. Be confident in your stop and that it's actually part of your process and saving you money. There will be that occasional time where you get stopped out, shaken out, and then the trade goes your way. But for the most part, when you get stopped out, there's a reason, and that's because the order flow is going against you. So just honor that. And for setups, I'm just still in my own little day trade time frame setups where when the price is below the open, I'm looking to short, and with down sloping moving averages, I'm looking to short, and vice versa on the upside for longs.
Good stuff, bro. Good stuff. Yeah, I love the tactical stuff too about your stops and how to and just like having a good tactical approach about understanding the environment, the context of the tape that you're going into, right? So I to Bo's point, right? I think he's talking about kind of stuff that I love to hear about. That's really where the rubber meets the road. In how much you're going to risk, honoring your stops, and being able to protect that account so that you can always live to trade another day. Because as Bo said, there's always another opportunity. But heads up, real quick, I just want to give you guys a read really quickly. So we were looking for that look below and fail of the overnight low, and instead what we got was the rejection, right? So we weren't able to build any value or spend any time. What did price do? Price opened at 65.89, made a marginal new high to what's that? Let's see. Let me just see if I can get a read on that. What's the RTH high here? 65.91. Is that what it is? Am I reading that right?
No, 6606.
No, the RTH high, the high that we just made now after the open at 9:30. Okay, no, so you're right. I'm sorry, 6606. You're right. Sorry, my bad.
Sorry.
So look, we opened at 65.89. We rallied what, 20 points, which is not a lot in this tape, and then immediately we're rejected, right? Where were we rejected from? So remember that on my trade plan, right, I had highlighted. So I'm frequently going to go back to this stuff, guys, because it's how I see the market. I hope you guys get value out of this, because those areas, they matter. Okay, so you can see here that on the trade plan. Let's see, bring this up here, get it into screen. So we had setup number 2 was 65.15 to 65.20. Okay. Once we tested it once, we overshot it, and now it's acting as resistance, 65.06. But essentially, it's just it's sold into this prior. It used this prior low, swing low, as resistance, and it sold right off. So that is not that's not encouraging for the bull side of the tape. Really quickly though, on the internals, it's -2 to 1. NYSE is -2 to 1. NASDAQ is -2 to 1. The VIX is up 6%, trading 27.69. Crude is up 4%. Gold is down 1%. And guys, and rates are keep climbing, right? 10 years up, almost 2% at 4.4. So really quickly, two things I want to touch on is so I think I highlighted this during the pre-market, but let me just show you guys something. Right. So this was yesterday's, our options data is something that we have to be mindful of and we have to monitor. Right. So this is why I said that the book kind of flipped a little bit today, and why we might want to look for higher prices or a short cover rally. So yesterday we can see here how mostly we had puts. Puts were really were really dominating yesterday, right? You can kind of tell here that we had more puts than we had calls, right? So now check out what today looks like. And oh wait, hang on, back that up. So look, this is the difference from yesterday. You notice the difference here? We have way more calls than we sorry. Dang it, where did I go? Today we have way more calls than we have puts, right? So that tells me that that could be a sign that the bigger money's buying. But here's a problem though, and this is kind of like the stuff that I was looking at earlier. Check out this chart. I left it in the carousel in the pit, and what I wanted to highlight here was CPI. This is a chart that I found on X from Blue Curtic, and it shows CPI inflation during major oil supply disruptions, and you can see here how until oil starts to stabilize, I mean, how can the market rally when crude is at $92, guys? It's going to be that's going to be tough until this Operation Epic Fury settles down and we can get some normalcy and crude comes back down, it's going to be very hard for any. You have to. For me personally, I'm telling myself that I have to look at each rally as a dead cat, as a dead cat bounce, because with oil at 92, I mean, yeah, I can't. It's hard to even get out of my mouth. Oil at 92, like how the market it can sustain any type of meaningful upside, nor put in a swing low. Here's another chart that popped up on my radar. This is Nasdaq sentiment. We can see here that how the Nasdaq sentiment is basically at an extreme point, right? The key difference this time is the prior extreme sentiment readings happened when we were closer to when we were at deeper lows, right? You can see here that the market had, oh, let me just get a different color crayon here. You can see here that the market had like already sold off on each of these, right? This is a big move down, and then we hit an extreme. Big move down, then we hit an extreme. Move down, extreme. Super big move down, extreme. I don't think we can call this a big move down. So I think that what we're seeing here, although we hit the reading, we could possibly move a little bit lower. Looks like that look below and fail is in here. Did they trap? Gosh, I gotta get back to my screen. Okay, let's see. See what the lows look like. Okay. Yeah, okay. There's no way I'm buying a 6578. There's no way I'm buying the high of a 10.5 minute candle. So I'll just be patient here. So what if this is gonna stick, right? And we get some type of a balance down here, then that's more my style. That's more what I'm looking for, right? Where we kind of maybe perhaps we do something like, where we come up here, get it to stick both here, and then you enter later in the balance. So here, look, this is the same type of entry, guys. This is a favorite of mine, right? So I'm gonna put. So this is actually a good one because it's imperfect, right? It's easy to point out the perfect occurrences, but I want to show you what this looks like. So on my on my game plan for the day to get long. So it traded at about 5 in the morning. I actually was awake at that time, but I had no intention of buying it because I knew that I wasn't going to get in on the first touch because it came back down and it made on this 5-minute bar. I don't think I would have gotten in. But what I want to highlight is here's where here's where I actually took the trade. So look, it traded the first time at 5 a.m. I didn't get in until almost 3 hours later. But on the retest, right, I'm looking for that double bottom. I had an order in at 6507. I had 6502, and I had an order in at 6597. Right, I only got the 92s. I'm sorry, I only got the 6602, and then I bought on the way. I added one at like 6609. But that ultimately, when I took 2 scales, plus 5 points, plus 10 points, and then I had a runner, and the runner stopped out. But what I want to highlight is this is the type of structure that I look for right here, right? This is and this happens over and over and over again, where you have a support, right? Price comes on, it gets co-signed by buyers. Buyers are in there, they're buying it, right? And then you get the retest, right? So we formed balance. Lows were rejected, and then price springboarded. And so that type of structure is what I'd be looking for here. Hey, look, this is another interesting one. This is the number of this at the on the ES S&P 500, the number of intraday reversals since 2025, since 2005. And you can see that all like this always there's always a spike in intraday reversals at times of heightened volatility. This is the financial crisis right here. I mean, I think there was some volatility in 2011, right? It's probably that. But this looks like COVID. We just hit an extreme right there. All right, so nice strong move up here. Let's take a look at the internals. Internals have improved slightly. So we have, I want to point out this divergence too, that on the Russell did not take out the overnight low and reclaim it. It stayed strong. And the NASDAQ took out the low and then reclaimed it just like the ES did. The VIX has come on at 8. Remember last week we were highlighting how oil had a support at 92 and a resistance at 98. Well, it looks like that support that was at 92 is now becoming resistance. So we've just been rejected from 92 again. Keep an eye out for that. Let's take a look at the weighted AD and see if that gives us an idea for the context and what the day could be like. All right, so yeah, here, guys. I mean, I can't get too bulled up when the weighted AD is negative, although it's not strong negative. It's not really that negative, but the advanced decline is still negative 1,000. I mean, we could stage a massive rally and comeback, but until these internals firming up a bit, our cumulative tick down here is negative, and the weighted AD is negative. So caution out there at 92 level in oil. Let's take a look at see if any of the real-time flow stuff can help us out with. So I'm considering this, right? The setup that we discussed near the open. Let me just look at my plan here. So my lowest sell is okay, 6,700. But these can be also used as resistance points, right? So we're trading 65.94. Yeah, guys, we're bumping right into that level, 65.94. Let me just see exactly, check my notes here. What was that level? 65.94, right? Okay. All right. Internals continue to improve, guys. The weighted AD is also approaching the zero line. And we have now where we were 2-to-1 negative on the NYSE, 2-to-1 negative on the NASDAQ. We are now 1.2-to-1 negative on the NYSE, 1.7-to-1 negative on 1.7-to-1 negative on the NASDAQ. Find it interesting how the NASDAQ came down here. I hate horizontal supports, man. I can't stand them. I don't believe in them at all. But this looks like it's true. Let's see if it holds true on the opposite end. It kind of does. I think that's solid. I think we can leave that in there. But on the SPX, we still didn't touch the bottom channel, which is something we should be mindful of. All right, let's take a look. So remember, again, looking for that value area low, yesterday's low area, to see if that acts as resistance. So what that's going to look like on the chart is something like this. Where we? Oh, that's too thick. So I'd be interested in seeing a test of yesterday's low where the SPX fills the gap. We do. Did we fill the previous gap on the downside? Do you know if we filled it
Which gap?
on SPX on the big one? Though we had an unfilled gap to the downside. I could be wrong. Yeah, we did, and we filled it. Never mind. Okay. Yeah. So I'm interested in this. I'm interested in price coming up here and then testing this area. All right. So how am I going to engage this level? So first, I want to see that acts as resistance, comes back down, and then the initial high is unable to be breached. And then any retest of that high that gets me close enough, I'll make a real time read of it. I would be looking to fade that move because I mean I already traded that look below and fail once, so I'm not doing that again. Yeah, so if we can, I'm gonna see what we do at yesterday's low and value area low, 66.16 to 66.27. If we can get close enough to that settlement at 66.34, that would be great. And then read the price action in real time and make a real time decision. Let's check this out here. Let's go out here. Bo, to your point earlier about, just engagement tactics and opportunities and, risk management. This is what I've been doing, what I did. Well, I can't say I've been doing it, but what I tried several times and it worked. Was I threw so typically I'm trading two. I don't think my strategy is built on having a runner, and so I always have to trade more than one contract. So my minimum size position is going to be two contracts. Okay. So I was lately what I've been doing is add. So if I think that, say, my plan is designed to get me to 5 points. Say I know I have a pretty good shot of getting that 5-point target and not much more. What I've been doing is adding 2.5. So I'll buy 2 contracts and then maybe 5 micros, right? And then those micros, I can fan those out. If they do turn out to be a runner, I can scale out of them, feather them out. And I did that twice last week and it worked out really well. So I'd be interested in something like that.
Nice.
To that point, yesterday, so I had on the Truth Social bomb that, dude, can you believe that Truth Social bomb? That sent the market up 3% in like 5 minutes. Like,
yeah, wow.
Yeah, I mean, imagine you knew that was going to happen. And not if, because there's no if. There were in my opinion, there were a lot of people knew that was going to happen, and they were getting long way before it. And so, if you knew that was going to happen, you got paid handsomely. But nonetheless, I had a setup in that area, and I was, it was just getting the morning out of my eyes, and I had a support buy. And as I was like, filtering out the level. Yep, I agree, Magister. I think that was 100% manipulation. So as I was filling out my game plan for the day,
Yeah.
I ID'd the level and we were trading it, and then we moved away from the level by a certain point. So I said, all right, I'm just gonna buy 5 micros. Bought 5 micros. I went to the bathroom, came back. I was up like 4 grand. Yeah, it happened that fast. I couldn't believe it. I was like, what happened? I didn't have live squawk on. All right, guys. We just took out the early high, made a new high at 66.11. Internals continue to improve. Wow, AD has really closed the gap here, guys. Negative 651. Nicey's now one to one negative. So we are getting some type of confirmation. And cosine of this move. And I bet you here, let me just check. I can just see it. I bet you that's halfback. I bet you that this is halfback here. I don't even need to test it. That's halfback of the 61.8, guaranteed. Let's see. Ha! There you go. We tested 61.8 and then we rallied. Okay. Yep. All right. So again, skew is really, really a big deal here, and that's I highlighted that in my game plan that you can see it here that put skew remains elevated, right? So this is under the hood, guys. The tape is primed for a squeeze. Okay, here's another chart I want to share with you. Hang on, let me pull it up. Where is it? Okay, squeeze metrics. Yeah. So look at this, right? If you guys look at this, is not confirmation. So the SPX is the green line. The DIX is the blue line. So you can see here S&P rallied from the low, right? But what did the DIX do? The DIX did not confirm the move. It actually rolled over, guys. So look at this look right here, right? Where we made this low. Hang on, let me try to highlight this a little bit better for you. So you can add this to your narrative. So here, where we made a low, right? The S&P is the green line. The S&P made a low, and the DIX made a low and confirmed it, signed it. We had a sustained move up. Look at what happens on divergences, right? S&P made a high, but the DIX did not confirm it, and we rolled over. All right, so that's exactly what happened yesterday. S&P went up here, and the DIX came down. So that is not a cosign of that rally, and that's why I ultimately think this is going to result in a dead cat bounce. I mean, that can change, I mean, obviously another truth bomb. I mean, we're in a headline minefield, right? That can change within seconds, but. Yeah, what bullish divergence are you talking about, Magister? I'd be interested in having a look at that. Was that on an oscillator or something? Peter Brandt was the clear Yeah, that was for sure. The bathroom trades are the best.
Or the worst.
Yeah, true indeed. True indeed. All right, guys. It looks like we just tested yesterday's low and pulled off some. All right. I'm expecting, the reason why I'm asking Magisters, I'm expecting to see some divergences. Oh, you know what check this out. I found this really interesting divergence too. Yeah. Oh, good. Hey, JB. Yep. Great observation. I spotted that yesterday. Check this out. JB just thought JB always tends to watch volume, right? This is SPY. We can see volume better here. Check this out. I looked at that yesterday, and we definitely had the volume to confirm it, right? So look at this, right? This is SPY. Look at the volume spike we had. You see that? Good eye, JB. We had the type of volume you see at lows, right? At least an interim low. But like I said, pointing out that oil chart to frame it for narrative, guys. Until oil comes in quite a bit, I'm having a hard time, switching from a buy the dips. Sell the. I've been saying buy the dips for so long. I have a hard time changing from a sell the rips ahead mindset to a buy the dips approach. I mean, look at the 10-year. 10 years up 4.4%. It's up 1.5% today. Oil's up 3.5%. Gold is coming off. I think I don't know. It's hard to read, but I found another interesting divergence too that I can share here on the financials. Guys, look at the financials, right? Check this out. Right? We're gonna have to zoom out on this a bit. Look, the financials just had a MACD crossover. Like, the fast moved over the slow, but I think it was on a higher time frame. Hang on, hang on. What was that chart I was looking at? Dang it. Man, I'll come to look at this though, on a much lower time frame. This is at RSI is at an extreme here. Oh, this is wrong though. Hang on a second. This is supposed to be the 14 period. And then this is supposed to be the 5. I had those backwards. No wonder. All right, cancel that, guys. I had my charts flipped. That is definitely not. Oh, look, interestingly enough, look at this on the XLF, right? I have this channel drawn in. Look at what, man, I love technical analysis, and I chart a lot, and then I come back to these charts, maybe weeks or days later, and look at these patterns and see how they played out. Look at this, right? So we had this trend channel with 1, 2 touches. The third touch, this is a weekly chart, right? It had a bounce, and then it failed, and we closed below it. And then what did price do? Price went rallied and right to the trend line, to the trend channel, tested it as resistance, and sold off. I mean, you can find these patterns all day long.
So one thing to be conscientious of is just how much cash has come out of the markets. I was saying in my room yesterday, these guys, if a bottom gets put in and they haven't put some of this cash back to work, it's problematic, right? That they need to do some rotation here, regardless of whether the market keeps going down. So just, it's like a reminder to myself and what I was talking about with short covering rallies. There's short covering rallies, but they're also, where else do you put your money in the world right now? You still just put it back into US markets, right? So, um, these kinds of ranges, they don't just sort of work themselves out immediately or anything else like that. I mean, even if the war ends, the 80s could be the new 60s in terms of oil, and that wouldn't really like kill the consumer, in my opinion. It's we all still have to drive, we all still have to consume oil, and what could really be the bigger problem is if the shock continues, in the sense that you have oil having the kind of rip that gold had or something, where we're talking, instead of talking about $80 and $90 oil, you're talking about $200 or $300 oil. And if something like that happened quickly, who knows how that really goes with everything. But 80, $90 oil, it's not that big a deal for the consumer. So yes, this will continue to have an effect. If oil keeps going higher, markets will have a hard time rallying. But we've had a nice correction here. So that's kind of what I'm reminding myself of, is if we don't really go into a recession, here's the 10% correction that everyone was looking for. So money managers and bigger fund flows, at some point they're going to need to start rotating. And when you see like gold and silver and stuff coming off the way it does, I mean, gold could easily drop back down to 3,500 or 3,000 or whatever, and a lot of that money has to rotate. So I'm trying to respect my long signals, even though I like trading short. But right now I'm above the open on the ES. We had a little bit of an upswing in terms of that faster moving average. I shorted the downslope of the slower moving average here on my charts on the 15-minute, because that's sometimes a really good failure rejection level. And it didn't really reject as hard as I wanted. So I'm still pretty cautious here. I think we could get back up to that gap fill at 66.35 or whatever. And then we'll see if we can build some momentum from there on the upside. And as Manny was talking about with the advanced declines, you started the day minus 700, you printed minus 1,500, and now it's reversed to minus 250 and still making highs. So those are the kinds of bullish divergences you want to look for. Is we have a day like this where the advanced declines reverse from minus 1,500 and go positive and can close like plus 1,500 on the day. Again, it's only maybe one day's worth of action, but it could be the day that, oh yeah, they start to buy some of the stuff and reestablishing some of those positions, or just heavier weightings on whatever they've come out of, So again, don't be stubborn with your positions or with your opinions on where these things can go, because you really have no idea. That may not be helpful. It might just be more confusing, but I like to think of it for my own sake. If I'm confused about what side of the market to be on, so is the market. And sometimes that just leads to choppy range bound action. And when you've had a huge volatility expansion event or day, it's hard to necessarily, repeat that kind of volatility. In other words, 150 or 264 point move was our move yesterday. The 5-day ATR is 155 points, which is as big as it's been in forever that I can remember. And we had like an over 2 million contract day in the ES. So what kind of day is it going to be likely today? Like, are we going to actually print 150 handles? I don't know. The market needs to continue to digest this, and we just might have to keep waiting for the next news bombs to hit before you see that kind of volatility expansion. So again, when you have a winning trade, don't be afraid to take some off. Don't be too greedy about it. Take some off, lock in some profit. Enjoy a little win because people are getting run over left and right. So enjoy making some money and don't get too greedy and lock it in, and don't blow out accounts. That's right. And my reference point to the opening print is sort of like when you see a market move above the opening print, and then it moves below the opening print, and then it moves back above the opening print. It's like, how many of those are false versus real? It just it just sometimes pays to take your profit when you don't necessarily think you have a trending day or a day where the follow through is going to be there. Um, that's the tricky part of trading, is constantly navigating. If you're a range bound trader and a scalper, when do those markets change from being range bound to trend bound, right? And you have to try to develop your own definitions based on what the primary time frame is that you're trading off of, primarily. So for instance, if I'm taking a trade off the 15-minute chart, I mean, I really technically should be expanding my stop and my volatility level based on the fact that it's a bigger time frame than trading the 1 minute. I don't always do that, but those are two pretty close examples. The 1 and the 15 are pretty close versus like, someone who's like a 1 minute trader then trying to also do sort of swing type of stuff. And that's sort of more something I'm interested in trying to do more of. I do it on occasion, but it's like, how do I trade around a short position right here? And it's tricky because if you put those extra units on and then they start going against you, but you have units that are deep in the green, like, where do you balance that out, and where do you cut your losses if something goes from green to red? And all those kinds of things can be super confusing. So in my world, I like to really just, the simpler that I keep it and the more sort of objective and even keeled I am about it, the better I do. And I tend to just make my decisions, take my stops. I don't get emotional. But when I start like confusing myself and flipping around and thinking that every little squiggle is going to be the next big move, and if I don't get in now, I'm going to miss it, that's when it always costs me a lot of money. So right now I'm looking at the RTY and the YM, are pretty firmly established here to the upside. And, it might be some of that rotation I'm talking about. I'd like to see the NQ catch a bid and get back up through its open. And then maybe we can run some of these buy stops and try to test a little more of that 6650 level again. If you think about it in terms of like where where the ATR might take you, let's say the ATR right now 155 points. Well, okay, if we run 2/3 of that in the regular session, that's 100 points. So, maybe something quick and easy like that is a way to identify, like, okay, let's say we put the low of the day in, like we could easily rip up to 6673, 6675, whatever you want to call it. And then you can look on your sheets and look at your levels and see, you still have the 200 day at 6650. Like, what if we reclaim that today and the money starts coming in again based on a reclaim of the 200 day? Then maybe you do put in some kind of big follow through day to the upside. And let's see, the NQ 200 day on my sheet is 342. So we've got a little work to do there, but not much. I mean, that's just basically rallying back up to the high of the regular trading session. And I will point out that the overnight ranges from last night were actually much smaller than what they've been lately. So, that could give you some fuel to fire to sort of like make an attempt at fulfilling those 5-day ATRs. The 5-day ATR on the NQ is right now 637 points. That's still a lot, and it's expanded. But when you can easily have 1,000-point range day in the NQ on big volatility, it's like, okay, so again, maybe I'm confusing people more than not, but these kinds of things, when I talk through them just for myself, it kind of helps me understand, whether or not I'm convinced and confident in what side. For me, it's what side do I want to be on? Because when I try to really trade both sides, it's harder than trying to be confident about the fact that, oh, you know what, I think money should be coming back into the market, so I'm going to try to look for those long signals only, or vice versa. This crude thing is going to continue to be a problem, and I'm going to only look for short signals only. And so, yeah, just talking through that is very helpful for me. I don't know about you guys, but like an interesting thing to see here, Walmart up 1.87% on the day percent. Yeah, those are like, are they defensive because people buy, if we go into a recession, they're going to be staying, cheap and buying inexpensive stuff, or like, but why wouldn't crude be also crushing stocks like that, Amazon's down 1% on the day, so Home Depot's down 1%. So maybe that's just part of like some of the rotation that you see. Um, if I'm looking at the big board here, it's really not. It's pretty mixed so far, and that's good. Like we want to see some stabilization and some resolution to all this stuff. So it's going to be the 50-day or the 200-day moving averages are going to be, you know, they're not just going to like let go of those without a fight, right? We could chop around those 200-day moving averages for quite a long time. And when uh, when the Fed has to deal with kind of both sides of the mandate, it's one of those things, we could be in this kind of environment for a long time where, inflation rears its head and then the Fed has to raise a little and then, the unemployment jumps up and it looks like we're going to a recession and then they start cutting and, they don't know what to do or how to handle anything. And they're just constantly like doing one thing and then doing the other. And the market could really just kind of like muddle along sideways and in a big range for a long time. Like it's quite possible we've established that range, and maybe it's between 7,000 and 6,000 or 7,000 and 5,000, or maybe we're putting in the bottom of this correction and we rally back up to 8,000 or something. But what's going to be the next leg? Is it, if it's AI, like AI is also simultaneously deflationary in terms of making everything more efficient and, doing the same amount of work with fewer jobs and fewer people employed. And so it could be something where we just go into a real stock pickers kind of market, or a market where we're just constantly, oh, what's today's rotation, who's rotating in and out of what today and how is that moving markets. And when that happens, a lot of times you don't get that extra follow through that we saw off of the tariff tantrum lows, right? That was a hell of a bull market. Yeah, JB, as far as my 15-minute doji signal, the hard part for me on one like this is it's got a big range. And so if you were taking this doji signal and bracketing either long or short, I wouldn't personally, I wouldn't use the full range as my stop out on the other side of the doji. I would pick like the midpoint or maybe the closing print of that doji or something like that, just to not have to use, because what was it, high of 09.5 down to 92. It's like that's a bigger stop than I like to take. So my really favorite doji reversal signals are the ones where you have a really big thrust up or down for several 15-minute bars, and then you put in a really nice 15-minute doji with like 5 or 8 point range or something that gives you a really nice tight stop out level where you can kind of load up a little bit if you want and not be like betting the farm. But I like it here. I think we could have some legs here today. And as long as we hold the open, my sort of basic principle on that is if you're above the open, you're trying to put in a green candle on the day. So and then vice
Yeah,
versa.
good point, Bo. That's what I just sorry guys,
Thank you.
I
Thank
just
you.
tuned out to
See if I can make some money off it. That's the part that, you know, we all want to be in here making money.
Hey guys, we have an update here. NYSE internals just flipped 1-to-1 positive on the NYSE. Nasdaq is still negative, but we're still bumping our head up against. We can't. We haven't even been able to test yesterday's low at 66.16. Just above there, we have 66.27, which is value area low, and the settlement up at 66.34. So this is a lot of the same look that we saw last Friday, and that price just could not break into get above into the prior day's range, and it just was struggling to get into value and kind of turn that corner into into a green day. So just be mindful of that. We want to see us get into that range with some strength and momentum. What I'm thinking here is let this continue to build out, right? I'm still eyeing the same setups I gave in the pre-market, which is a fade up into that area, or if we get a little bit further of a structure, like if we get a higher low here, then maybe there's an opportunity for a trend line break. So if we get say we get a test down here and we formulate a higher low, right? And then we come down and we break that trend line, I would sell it on the retest of that trend line and look for this move down. Or if we continue to move up from here, form some acceptance, then take a pullback later on for the move higher, or a look above and fail, right? Where this comes down here, I'd be fading it right into here. So that's what I'm looking at. That I think that kind of lines up well because we could get a look above and fail of the settlement. So that's what I'm kind of waiting on. I'm just getting through some emails here. Let me know what you guys are trading. Have you guys had any success this morning? Let me know what's working for you. I had that one trade in the overnight session that went for 510 and a break even. Since then, I haven't really there hasn't really been much, to be honest with you. I mean, let me see what you guys have done. Bo, have you done anything?
Yeah, I had a couple shorts. I shorted this 010 level, or the 6610 level on the first touch of that downsloping moving average. Right now I'm looking to buy this on the reversal. So I've got 3 bid at 5 1/4 and 3 bid at 4 1/4. And the other thing you can do on markets like this is watch the ticks closely. So you can't see it on mine, but just to the right of my dome here on my next screen, I've got my tick chart. And so I kind of like, instead of getting too jumpy and trying to jump in on something, if I can quickly glance over at my tick chart and it's like, yeah, do I really want to chase something on an entry? Like if I'm trying to be long, do I really want to chase the entry if the ticks are plus 800 or plus 1,000? Like usually not. That can be an easy spot for the algos to just kind of quickly reverse and take the liquidity the other way. So I'm looking for a retest and a reversal on this bigger time frame, 15-minute time frame moving average, so that I want it to come down here, just barely fill me, and then explode higher and have this thing start to turn upwards in its slope.
Man with a plan.
And And ideally, if we get like minus 300 down ticks, somewhere like that, at the same time as I'm getting filled, that's the kind of thing that I like as far as. So I got 3 on, I got 6 on, 4 3/4. I want it to go pretty quick. And maybe get 4 points on 2 if I can. So I've got 2 offered at 8 3/4 and 2 offered at 12 3/4. If all I get is that first one, that first offer, then I can put my stop in here, break even, and have, you know, a little bit of profit on a trade and hopefully get lucky on it. So there we go. There we go. Lovely. Now I can just stick my stop in, break even, and it could absolutely reverse super quick. But see what happened? I bought those contracts on a minus 300 down tick, and where I got filled on the offers is on a plus 1,000 uptick. So that's what I mean by sometimes you can take advantage of some of these technical tools that, you know, the sort of regular folks trying to trade retail, they may not know about some of that stuff. And it's, you know, it used to be the kind of thing that in the old days when we got 1,400, 13 or 1,400 up or down ticks at a time, it would ring a bell for me, like an alert. And it was almost always like if I was in a position, I would just boom, take some off at that. When the bell rang, I would just automatically take a little profit on it, just because it was like an extreme reading. And oftentimes when you get those, you know, that's just how it kind of works. I don't know. Maybe someone else has a better technical understanding of how that works. But so right now, my target on these last 2 would be at least 66.50. I want to see this thing retest the 200-day moving average, and the biggest confirmation of that will be if NQ gets a good close here above its open and also retests and holds its 200-day. So again, for me, that was at 342 on the NQ and 66.50 3/4 on the ES. And flipping over to the other charts, like it would maybe be an okay thing here if we see like the YM and the RTY start to come off a little, because you might see that rotation then come back into the ES and the NQ. So my stop is basically break even on the last 2, which I think I'm about to get stopped out. Yep, I did. And a lot of times I'm early on these, so it's, you know, it's like it may have been better for me to be putting it back on again now. But I really wanted to see NQ get up through there. And the fact that NQ rejected at this downsloping moving average, look at how perfectly it touched that. And now oftentimes when it rejects hard from that kind of one touch on the 15-minute, it can just put in a huge red bar that sweeps all the way down through those sell stops on the day. So you just, again, like honoring the stops, getting out at 05, you know, now here few seconds later, it could be 15 points lower or something. So or 100 for that matter. Ah, should have tried it again on that retest, but I don't know. Maybe there's news that's pretty good buying pressure.
Man, this is really bad here. This Delta trader is just like slow as AF. I wanted to look at that buying that mid and it just pulled away on me.
Look at where NQ rallied to. Okay, and the 200-day is at 342. It just perfectly to the 340. I mean, that's, to me, that's, or 343 it traded on that. So, you know, these levels are mathematical and they're meaningful and they work. $66.3525. So we filled that gap from, I guess it was just the Globex session open, basically, not like it was a gap. I don't know if I should call it that, but now anybody who's short has to be thinking, I better cover. This thing keeps going. Advanced declines now positive on the day. They're plus 200. Apple making a new high. Tesla made a new high. Starting to see some bidding come in on the other mags.
Unreal, man. Hey, Bo, does your Delta trader ever? You see my Delta trader, how it just locks up like this? Does that ever happen to you?
Not very often. Occasionally it does on the close when we get all that volume.
What about at the open?
Not much at all on the open.
Yeah, for me, it seems to happen almost every time there's like a volume spike. It's called. I know what's happening. It's called like a throttle where Rhythmic kind of throttles the. This is a browser based platform, and yeah, it just turns into this type of. You see my screen, like it's definitely way less responsive than yours.
Okay.
Yeah, yours is even. I mean, I don't know if it's delaying the screen, but it doesn't look like it's 100% there. I'm just trying to compare yours to mine, not right now.
I bought
Hey,
a couple,
sorry.
I bought a couple 18 and a quarter, and I'm trying adding to my winner here if I can, which I just
Yeah.
did. I've got 6 on. I'm offering 32 and a quarter on one, and I think I'll get stopped out in noise. But if I don't, all right, I got stopped out on 4 of them. I still have 2 of them, but again, my target is at least 66.50 on this thing. If the low of the day is in, we can easily go 100 points off that, 66.76 or so, whatever that low was this morning. And if we try to put in an ATR range that even comes close to matching the 5-day ATR, then we could go, 120, 130. And that ATR is 155 currently.
All right. I have a valid setup here setting up. So I'm gonna 66.15 and 66.20 with room. Do I have room to target? Yeah, I do. All right. I'm just trying to get my other platform up and running. I think I'm gonna have to if I'm going to be able to execute anything, which is what I want to do. I don't know if you guys noticed, but I had to switch over to Delta Trader because my Ninja platform was acting a little squirrely. And what I want to do is be able to be on stream and also eh, and also trade. Okay, just wait. My wife came in here. She knows better. Stay in your wing. But for what it's worth, though, I will say this is that I am not the way I trade is what I've realized here on stream now is I'm so fascinated by the way other guys trade, especially the guys who call out what they're doing, right? No judgment. I love to watch. I mean, there's so many different ways to skin a cat, and I love to learn from all of you guys. For as long as I've been doing that, I think that's probably been my superpower, right? And that my ability, I'm always curious about how other people are doing it. And one thing I realized is that I so I am not that active of so trading can be so isolating, right? You trade by yourself in a room, and you kind of the tendency is to think that the world is doing it the way you're doing it. But what I've realized is that I'm max 2, maybe 3 trades a day. And let me hear from you guys in the room. Where would you what's your mean average on trades per day? Bro, what would you think yours is? I'm I'm starting to ask myself, maybe I'm missing some opportunities but I tend to stick to my plan, and I don't. I mean, I'm max maybe 2. If I have a winner, I'm pretty much done.
Right.
Yeah.
Yeah, I trade way more. A lot of days I'll trade like 40, 50 contracts, which so that could be, 10, 12 entries. I tend to do better if I only trade 3 or 4 entries, but
Got it. Yeah. Okay. I mean, that's yeah. I'm typically, I my best year, which was I think it was roughly just under 3, and I realized that year I was averaging about literally my best year. I averaged 2.27 trades per day, and that was back in I think it was 2021. It was just after COVID. And what I realized was that I just wanted to replicate that. And so I dramatically changed my cut down on my stops, and I started to plan more. So I tend to be a little bit more cerebral in my approach. Like I definitely talk things out. That's why I love to stream, because I can just talk things out loud instead of like writing them down. I tend to I tend to write all my stuff down. Like I always have, my notebook here, and I have guys. I have a stack of notebooks like this, as tall as one of my kids. Because I used to write everything down. Right, it's just a way for me to work out that little inner voice in my head. But now I get to talk it out with you guys, which I hope it adds some value. Let's 6625. Nope. Okay.
So fast, it's just ridiculous.
Wow, that was a wicked reversal, right? Right from the settlement. Remember, guys, that was the area that I kind of wanted to see some acceptance above, and we didn't get that. I'm gonna try to relaunch this thing here. See if I can get a actual quote in. What do you guys? What are you trading now? 66.26. Is that accurate? $66.26. Yeah. Oh nope. Wait. 26 there. 23.
That was the right setup. I should have stayed with that one. Perfect.
Let's give this another shot. Actually, here, let me do this. I missed it again. God damn it. I'm also going to warn you guys. All right. I am not going to hold back. once I get, uh, if I, when I get angry in a trade, I tend to drop F bombs left and right. So you've been warned. I hope there are no priests or delicate fans in here. All right, let's take a look at the internals. 1.5 to 1 positive on the NYSE, 1.5 to 1 negative on the NASDAQ. We have a mixed bag. Price is trading 66.25. Down 10 points. The interestingly enough, though, the 10 years come off the highs. The Russell's up 0.25%. NASDAQ's down 0.5%. Crude has come off that 92 level, trading 90, 95. And the VIX is just chopping around at 20. It filled its gap, and then it's kind of holding their support. We're seeing those selling tails here. I'm wondering if we're going to see that same thing where we had early strength into late day weakness. Let's take a look around the horn. Bitcoin's down 1%. Financials are up 0.25%. Tech is down 0.5%. Tesla's up 1%. Nvidia down 0.25%. Apple up 0.5%, and Microsoft down 2.37%. What's up with Softy?
It's been the worst of all of it.
I know. Let's take a look at that. Let me just pull that chart up. Let's see.
I have a GTC bid on it at 367.
All right, let me check that out. I love that. Love that. Let me just take a look here.
That's just for a longer term buy and hold kind of thing.
Yeah, okay. I was just gonna ask that. Okay, let's take a look at Nvidia, Microsoft. You have it at 367.
Yeah.
Look at my chart. I like that area. Yep. This support area that's highlighted here is just 350.
Yeah.
360. So I think we're in alignment there. Look, we're testing that lower channel though, interestingly enough, right? Let's check this out. Oh man, this looks good down here. Stuff's looking really attractive, guys. It's testing its 200 moving average on the weekly. Interesting. A little bit lower, and it tests those previous highs where it launched before. It launched about $200 right from that support. I really like that there. Yeah. We have channel support coming in at let me just make sure, verify that channel is, yep, it's true. Maybe not. Kind of like this look better. What time is it? 11 o'clock. I got to get going here in about 15 minutes. God dang it. I wanted to buy those 15s and I missed them. Yeah, so I like that there. Yeah, so let's see what we have here. Mixed bag of nuts. SPX just filled the gap. Price ES is moving higher. Starting to build some value in here. We're starting to build some value over time, right? So we can easily see that maybe I was wrong on my call that this flag wasn't going to play out, and it is. Oh, look at this trend line touch, guys. Check this out. I think we have a perfect trend line touch here. Really close. Really close. Nope. But you can guesstimate it right there. Kind of have a pennant. This would be more of a pennant than a flag. Russell is starting. I'm wondering if we can start looking at the Russell as being a leading indicator. Because thus far, so it's been following like the same kind of trend. I noticed it yesterday in that it was kind of leading in terms of, maybe guys, maybe this is what we should be doing, right? Perhaps what we should be doing is if looking at when we're weak, we're looking at more as the NASDAQ to be the leader, and when we're strength, when we're at a long-term support like we are now, we should look towards the Russell, as that's been more bid than the NASDAQ.
You mean for the day session, or?
Yeah. So I've been noticing that when we're bullish, right, the Russell's leading. It's making higher lows where the ES is sweeping lows, right? So the ES is doing look below the fails, while the Russell is making higher lows. conversely, when we were weaker, the Nasdaq was kind of, making, where the ES was making a double. I'm just trying to frame this out for you guys. Where the ES would be making a double top, the Nasdaq was making a lower high. So yeah, I'll keep an eye on that. I love those types of correlations because they tend to not last very long, but what they do offer is short term edge, right? You kind of play that out until it doesn't work. And I remember, years and years and years ago, there was the ES was like tied to the Goldman Sachs stock, right? Anything GS was always leading it by a 5 minute candle. And I used that edge, dude. I used that edge for quite a bit, for quite a while. It just kept working for months and months and months. And then I can't even remember when it stopped. But the idea there is when you find those correlations, use them until they work, use them until they fail.
Mm. Nice.
I'm gonna trim this down a little bit and maybe trade off of this. All right, so we're getting that buildup of time, right? We've tested that. Now we're into value area low. We wicked, right? So here on the 15-minute, check it out, guys. We wicked on our first touch, right? And now what happened immediately? This is that look I keep highlighting to you guys, right? Then the very next bar didn't even tested the body, but immediately found support and ripped into the tail. So you can even take that when the wick of the next candle tests halfway of the body, right? As soon as it gets back into this tail, say we have this, let me just highlight this here so I can, I'm not sure if you guys are interested in this, but this is like for a good scalper trick. And I use this for entry sometimes off of supports, kind of like how Bo was mentioning earlier. Hang on. Right. So you have this bar right here, right, with this wick. As soon as this bar opens, right, you can, if this one opens here, and even if say your body was longer here, as long as it comes in just about half of this body and then immediately wicks and starts testing into this tail, you can buy that right here. Set your stop like somewhere under here, and your exits like just below this high. Like I would probably be exiting. I'd be trimming 5, 10, and then see if what I can catch with a runner. But that's a little trick trade I've used for years. It works quite well, and over and over and over again. All right.
Yeah, Luca, is that Lucas? Yeah, cool, man. Good to see you. Hey, I've never really back tested. What I've done is over the years, I've always journaled. And so I have sort of years of data basically supporting trend trade types of setups and entries. And that just comes from my dad and him teaching me to trade, to try to be a trend trader, or basically to try to identify if you're in a trending market, you want to be a trend trader. If you're in a ranging market, you want to scalp more. And that simplest explanation is almost, in real time, it's so hard to decipher. Like, okay, right now, is this day gonna develop into a trending market? It could, but it still seems like it's pretty choppy to me, like both crude, the instrument, that everyone's watching, but then all of these other markets. So careful about, you don't want to necessarily expect too much out of these trades. Like I would just take whatever you have off at the next level, mathematical level. So like looking at the sheets and those sorts of things that however they print on your charts or on my sheets or Fibonacci levels or whatever you can use math that the algos can use mathematically. Like right here, if we run stops, I wouldn't, maybe you give it a few minutes to see if it goes to 50, 66.50 and holds and rips through that. But you also might be just as well to sell the first touch 66.50 at that 200-day moving average, because there could be a lot of people waiting to sell that area. So you sell it and then see what happens, because it could just reject and fail right away. But anyway, to answer your question more, I've got my journaling is all done in Excel, and so I've got all my statistics over the years of like what my profit factor is on what kinds of setups, and I basically enter the trade based on if it's a trend trade, a reversal trade, a doji, and I categorize dojis on both trend and continuation, or continuation and reversals, and then I categorize them by 1 minute setups or 15-minute setups, and then long and short, and I just track what are my profit factors on each category of those trades. And I can tell you, exactly that reversal doji signal that I like on the 15-minute is one of the best profit factor signals that I have. And then the reversal signals on the 1 minute are some of the best profit factor signals that I have. And in my brain, that makes sense to me because those are the ones that are sort of the most powerful setups, right? Like a doji is representing a pause in energy, basically. And so especially where I like it, if you have a big thrusting up or down move and then you get that doji, that's when you expect the energy to really continue, whether it's a reversal or a continuation. That's, those are the setups. And then on reversal trades, those are the ones where you tend to get, that's the biggest profit factor, because you tend to get the most energy off of a reversal where a significant higher low gets put in and everybody's trapped on the wrong side, and it just absolutely rips and becomes, basically the higher low of the day, and measure your move from there and you get your 100 points or something in the ES. So I highly recommend for anyone in the business that journaling is really, really, really important, and understanding kind of what your bread and butter trades are will help you be more confident in taking those trades when when it's most fearful. And oftentimes when it's most fearful, that's the trade that's like the very best trade. And it's because everyone's kind of thinking the same way. They're totally afraid this thing is gonna, collapse or whatever. And so everyone gets long, everyone gets short right at the wrong time, and then that's what fuels the energy the other way. Hey Rev, thanks buddy. Nice, Lucas. Yeah, for people that are really more like software and coder kind of people, I think you have some of that background. Like back testing is awesome, and what everyone will tell you about back testing is that it's designed to, it's there to help you be confident in your setups. And so I can't really emphasize enough that if you're not confident in your setup, it's better to stand aside and wait. And that's kind of what I'm talking about too with like when I'm confused about the markets. If I'm confused about which side I want to be on, that doesn't make me confident in my setup. And I just tend to, then if I take a trade, it could work out and everything, but that's not it. More often than not, it causes me to lose money. I start flipping around. I start revenge trading, over trading, giving money away, doing a bunch of stupid things that no, but oftentimes when that happens, like your mindset, whether you call it you want to be mindset, it's really to stop and it does a lot of damage to overall in terms of your accountants and everything. For those of you are trading less and being more patient, that's great, and I absolutely applaud for it because I think every day workout takes push, but I'm not out.
Up, and the VIX is through that support, right? So we kind of have, underlying conditions are confirming. And let's just take a look at the weighted AD, guys, which matters is important. I bet you it went green, it went positive. That's another good sign. Okay, we were just stacking the odds in our favor. Again, we have a tick extreme, and while the ticks were negative, quite, the cumulative tick was negative, but look at the slope on it, right? So it's been straight up. So now, right? I think we got to. So at least for me, I have a pretty good idea on direction now. It was less evident at the open. What am I looking for? Well, here's what I want to trade. I don't know if I'll get it. What are we trading? 65. Yeah, any 66.50 on a back. Right now, that's going to be a little bit risky, right? Because I'm running into a lot of risk, right? But I mean, you can't trade with a risk, right? Internals firmed up, mixed bag. So maybe I don't get a new high, or maybe I'm not going to get. Again, my entire trade plan and style is predicated on really just getting me that 5-point target, and then getting me hopefully to 10 points. And then after that, anything else is bonus. And there's a reason for that, guys. Like, I again, I have, you know, I have a goal and and I kind of just mapped that goal out earlier. Let me see if I can share that with you guys. I was gonna actually do it live, but I don't know, it just got kind of distracting. But if I can get 5 and 10 points consistently it gets me to my target, which let me just show you guys. 3 times a week is really what I need. 200K kind of puts me right at where I want to be for the year. I was tracking so well last year, and then I got a little bit conservative during the summer, expecting that. So I flipped from trading 3 contracts to 2, expecting that I would be able to ramp it up into August, because the August September typically you get more volatility, right? And I was expecting that to be kind of the time where I was going to ramp it up to 3 contracts and try to hit those targets. And what happened? August was crap, right? August was crap. It started off like crap, and I fell behind my goal. And then I started chasing, and then I had larger losses than what I typically can expect. But you can actually, maybe I should do a webinar on that, or a live stream, just where I go over how how I've mapped out, to a road a pattern, a plan to 200K, and I can lose 15, 20, 25 points a week and still hit that target.
Yeah, that would be such a great webinar to listen in on. Oh my goodness.
You know what else, guys? So here, I was thinking about that. Thanks. So look, you can see I did it as like a trader talk. Just a simple repeatable plan. And it's my I was going to do a trader talk on it, and if people are interested in it, maybe I'll plan it out. Another thing that I want to share with you guys, right? And you guys will hear me talk about it when David Dubay comes on, and it's a tool that it's an old tool that few people know about. Bo, you've probably heard about the clock, and it's really it's okay. So in a nutshell, it gives me a roadmap for each day's highs and lows within a certain. So it's not price based; it's time based. So, for instance, today, let me just frame this out for you guys, so you can see. Maybe I'll start framing this out every day, so that I can show you. So let's look at a minute chart. Right, today's S3L. Today's an S3 day. And so what we're expecting on an S3 day is a low pivot in between 950 and 1040. Okay, so our low came in just a little bit. It's not perfect. Okay, it's not perfect. And then so we're expecting a low between 950 and 1030, a high between 11 and 1140, which we had. This spike high came in at 1050, so it looks like the clock's a little bit early. Our next pivot is a low into 12 to 1250, followed by a high into 2 to 230, and then a low at 330. So that's why I said that I was looking. Yeah, sure, Tom. I'll definitely do that. I actually have, so here I can actually show you. Like, I keep it up on my wall. If I'm looking at, you can see it's right there. This is it right here. I don't know if you guys can see, but that's where I keep my study. It's that I follow every day. And the good about it is, if you how I was framing my plan, I didn't mention it, right? So I said, if we can get up here above yesterday's low, value area low, and long, and I in between 10:30 and 12 o'clock, because I'm expecting a high pivot. So what? And I know price is going to retrace. So for that, I'd rather wait and buy 12 to 1 o'clock, right, and then catch that ride into hopefully the trade by 2:30, or maybe in a runner, right? But that's just a bird. I'm going to start mentioning it every day. with a lot of detail with people, and also with the guy, and then what happened? I kind of stopped it because causing some confusion. Year and I can probably show a learning curve for a lot of people. I can share on. Once you have to